This is Anthony Galliano for B2B Cambodia with a special market update. Happy days are here again for the financial markets as it's tariff hesitation. The White House announced a 90-day tariff pause, which came into effect less than 24 hours after steep new tariffs kicked on for most trading partners, dramatically reversing course by dropping country-specific tariffs except on China. Mexico and Canada are still subject to 25% tariffs on goods that don't comply with the US-Mexico-Canada agreement, as well as the 25% tariffs on steel and aluminum and foreign autos. However, are not subject to 10% tariffs that will now go into effect for goods from other countries. During the 90 days, the 10% baseline tariffs, which came into effect on 5th of April, remain in place. The exception is China, as trade tensions are escalating. The White House announced an immediate increase in tariffs on China to 125%, up from the previous 104%. Beijing had announced a reciprocal 84% tariff rate on US goods effective April 10th. So what triggered the pause? There are several reasons. The number one reason is most likely the financial markets, in particular the sell-off in the US bond market. The bond market is where the US government borrows money by selling treasury bonds. When there is a sell-off in bonds, the price goes down, the yield or interest rates go up, meaning the cost of borrowing spikes. That increases the cost of borrowing for the US, which is now $892 billion in 2025, or 3.1% of GDP. US Treasuries are considered the safest debt in times of uncertainty. They are valued as a safe haven where investors park money at times such as 2008 and 2009 when we had the financial crisis and when we had the COVID-19 pandemic, and when there are economic challenges such as tariffs. It is believed that foreign governments were selling US Treasuries. The 30-year Treasury yield marked its largest three-day yield increase since the pandemic. The 10-year yield's three-day gain was the biggest since the summer of 2022. The 30-year yield rose 0.072 percentage points, and the 10-year climbed 0.151 points on Wednesday. These are some of the most watched bonds as they are the basis for the rate on mortgages, credit cards, and other borrowing in the world's largest economy. As yields climbed, investors speculated that the ripple could cause a financial crisis. The price action in the bond markets was termed as wide and choppy, with the absence of liquidity, causing concern of the stripping away of safe haven status and signaling that the confidence in the US economy was shaky. Besides the drop in the bond market, US stocks dropped more than 18% since the inauguration. And the markets lost $10 trillion in global equity value, more than the GDP of 50 countries combined in the 3 days since the tariffs on the 180 countries were announced. The US S&P 500, a stock market index that tracks the performance of 500 of the largest publicly traded companies in the United States, suffered its deepest losses over the 4 days since the benchmark's creation in the 1950s. On January 17th, the S&P 500 index was 5,997, and on April 8th, it was 4,982, down 17%. The market drop saw a sweeping wipeout of investor wealth, including retirement and savings accounts. Investors also became nervous that a prolonged trade war was posing a significant risk for corporate profits and the US economy. After the announcement of the pause, US stocks immediately surged, posting a historic rally. The Dow skyrocketed 2,963 points, or 7.87%, and the S&P 500 shot up 9.52%. The tech-heavy Nasdaq soared 12.16%. In the end, the markets were the guardrails. A growing alarm inside the US Treasury Department over the developments in the bond market was the main factor that made the administration hit a pause on the reciprocal tariff regime. Another factor was the acceleration of government and industry voices, including billionaires speaking out on the tariffs. In particular to note, Jamie Dimon, the JP Morgan Chase CEO, told the media he thinks a recession is a likely outcome of tariffs. I think it could get worse if we don't make some progress here, saying tariffs will likely increase inflation and are causing many to consider a greater possibility of a recession. Elon Musk, the Tesla CEO, shared a video early Monday of economist Milton Friedman touting free trade and the benefits of importing goods, and reportedly lobbied the president personally not to impose tariffs. He was sparring with the US president's top trade advisor for praising tariffs, most recently saying Tuesday, he's a moron. He's dumber than a sack of bricks. And Musk's brother, who's also on the Tesla board, Kimball Musk, has criticized the tariffs as a permanent tax on Americans. Bill Ackman, the hedge fund manager and longtime supporter of the US president, repeatedly spoke out against the president's tariffs, calling Tuesday for the White House to issue a 30, 60, or 90-day pause on the tariffs. This was to enable negotiations to be completed without a major economic disruption, and saying Wednesday morning the financial chaos tariffs have sparked are not the markers of a successful policy, and many small businesses will go bankrupt if the tariffs are not paused soon. Other factors were the fear of a recession and the outpouring of countries to negotiate. Vietnam is an excellent example of a country taking immediate action on the tariff negotiation front. Vietnam has emerged as a manufacturing hub for many companies that sell goods in the US, including multinational consumer good retailers such as Nike, Adidas, and Apple. This is because of the blend of relatively cheap labor costs and supportive government policies. Since the last US-China trade war erupted during the president's first term in 2018, many Chinese manufacturers have also moved their production to Vietnam in order to avoid US tariffs. Vietnam's trade surplus in goods with the US more than tripled to a record high of $123.5 billion last year, from less than $40 billion in 2018, according to US data which pegged Vietnamese goods exported to US at $136.6 billion in 2024. Vietnam and the US agreed to start negotiations on a reciprocal trade deal, with the breakthrough coming just hours after the president announced a 90-day pause on higher tariffs. The Deputy Prime Minister, Ho Duc Phoc, has already met with the US Trade Representative Jamieson Greer in Washington. The two sides agreed to consider minimizing non-tariff barriers to each other's goods, as well as strengthening coordination to control and prevent acts of trade fraud. Vietnam was among the first countries singled out by the US president for showing willingness to negotiate over the tariffs following a phone call between the US leader and Communist Party chief To Lam. Vietnam is also trying to narrow the trade gap and push US business. Phoc is also expected to meet SpaceX executives, during which a permit to operate Starlink internet service in Vietnam for a pilot period is set to be granted. Phoc also rushed to the US Capitol from New York to witness the signing of a Vietnamese Airlines Memorandum of Understanding with the US bank Citibank to secure at least a $560 million loan to partially finance what's expected to be Boeing Company's plane purchases. Vietjet also signed a $300 million financing agreement with AV Air Finance to help fund its fleet expansion. Prime Minister Pham Minh Chinh said that Vietnam is working on US concerns about non-tariff barriers and reiterated that the government will seek to boost purchases of US goods, including national security and defense items, while accelerating delivery of contracted commercial aircraft. Cambodia is also coming to the negotiating table. Prime Minister Hun Manet has responded by reducing 19 tariffs on approximately 85 US goods, from 35% to 5%, and release of 2 letters to the US requesting negotiations. In a letter to the US President, Prime Minister Hun Manet offered to negotiate with Your Honorable's administration at the earliest convenience. Additionally, the Prime Minister said he has tasked the Minister of Commerce to coordinate with the US Trade Representative, adding that Cambodia remains fully committed to engaging in constructive and productive dialogue with the US government. It is to further deepen our bilateral trade so that both nations and people can enjoy the tangible benefits from these significant trade relations. On April 10th, the Prime Minister created an establishment of Cambodia-U.S. Bilateral and Investment Relations Working Group for the coordination of Cambodia-U.S. bilateral trade and investment relations, led by Deputy Prime Minister His Excellency Sun Chantol and Her Excellency Cham Nimol, Minister of the Ministry of Commerce. The challenges for Cambodia are its export-driven economy, with total exports accounting for 40% of the country's GDP, of which shipments to the United States account for 27%. The transshipments from Chinese established factories in Cambodia for tariff avoidance, and the large trade deficit with the US, which is $16.3 billion, where Cambodia imports $322 million from the United States and exports US $12.67 billion, and also finally, perceived market barriers. This has been Anthony Galliano with a special market update for B2B Cambodia.